Is the U.S. economy really on the brink of a recession? Or are we merely experiencing a necessary detox? Treasury Secretary Scott Bessent describes the current economic fluctuations as a detox, an essential phase to adjust, rather than a full-scale recession. Yet Commerce Secretary Howard Lutnick presents a contrasting viewpoint, suggesting that a recession may actually be critical for the successful implementation of current economic policies. This divergence raises essential questions for investors and everyday citizens alike. What implications does this have for your financial future? Typically, a recession is synonymous with declining GDP, increasing unemployment, and shrinking incomes. However, a curious twist in this narrative emerges. While these economic downturns can inflict hardship, they may also bring about advantages like reduced inflation rates and lower borrowing costs. Just as a lengthy winter yields to spring, the pressing question lingers: how long will this phase last? Adding to the complex fabric of the economy, new trade tensions have re-sparked fears of volatility. The recent imposition of tariffs on steel and aluminum has ignited threats from the European Union, who are considering retaliatory measures that could include a staggering 200% tariff on their wines and spirits if the Trump administration doesn't revoke its hefty whiskey tariffs. Such brewing conflict has palpable implications for the global marketplace, with a ripple effect likely felt across various sectors. Investment markets have not remained immune to these tensions. The S&P 500, Dow Jones, and Nasdaq indexes have all seen declines as investors adopt a more cautious approach. Market sentiment is shifting, and if you currently have a stake in these fluctuating markets, vigilance is indispensable. Pay attention to the ebbs and flows that could drastically impact your investment portfolios. In the fintech arena, pivotal movements are underway. BNY Mellon's recent strategic investment in Equilend, an influential entity in Wall Street's securities lending sphere, promises to enhance innovations and liquidity management. This collaboration, supported by financial titans like Goldman Sachs and JP Morgan, signifies potential shifts in conventional operations within the industry. Moreover, a clarion call for greater self-reliance is echoing from Europe, as former Spanish foreign minister advocates for autonomy in defense and economic policies. The question remains: will this pivot usher in a new era of global economic power dynamics? In this fast-evolving financial landscape, handle your investments wisely. 1. Strive for diversification. Avoid concentration. 2. Stay alert to inflation and interest rate shifts. 3. Keep a watchful eye on global trade policies. Changes can reverberate swiftly across markets. Your financial future hangs in the balance, and the conversation is just beginning. Are we really facing a recession, or merely navigating a detox phase? Let's discuss.